Hello, everyone, and welcome to another Elliott with analysis. Today, I want to talk about Bitcoin again. Right. So, if you have followed me, you will know that on the 19th of October, I call for a long in Bitcoin. Right. So, I argue that on the logarithmic chart, right, this wave one is very small compared to cycle wave one and three. Right. So, what I'm talking about is actually like this. Right, logarithmic chart wave 1, wave 2, wave 3, wave 4, and this wave 5 looks to be very small. Right, so that's why I think that this could be a primary wave 1, wave 2, and then expecting a wave 3. Right, uh, but 3 days later, on the 22nd of October, I close out this idea. Right, the reason is because on social media like X, I see too many people calling for Bitcoin to go, astronomical. People like the Trumps, Tom Lee, Robert Kiyosaki, too many of these billionaires, people with millions of following are calling for Bitcoin to go parabolic, right? So I think this is a bad sign, right? And my macro view on the entire market, especially equity markets, is that we are primed for a crash, right? A big one, an explosive one, as what Paul Tudor Jones would say, right? And yeah, and I have mentioned before that Bitcoin now behaves more like a risk on asset, right? Similar to the equities, right? The beta is very high with equities. So especially during the last 2 years, even though you can see some kind of breakdown recently, right? But generally speaking, uh, it is a risk on asset already, and it's very very integrated into the financial markets. Okay, with all the ETF and stuff like that. So it has a high beta, right? So right now, what I'm going to do is I'm going to relabel this wave, right? So you ignore the fact that on the logarithmic chart it looks too small, right? Because actually, if you go back to the a normal arithmetic chart, it's actually okay. Okay, so uh for the purpose of perspective, I will just using anyone is okay, especially when I zoom in. But over here, you see that I've labeled these waveforms like this: one, two, three, four, and five. Right, I'm talking about this thick blue line. Right, and today I'm going to relabel this. Right, so there's some components of force labeling over here, if you like to call that. And what I want to do is I want to move this wave five to this peak of B. Right, so this is the original chart that I've shown you before. Okay, and I'm going to relabel this. Okay, and one of the things that I have to do is, of course, I have to move this over here first, right? And then where should wave 4 be, right? You see that this is a three wave, right? So wave 4 must kind of ends here. Okay, and that means that this itself is a correction, right? This move is irregular in the sense that this low is not lower than this, right? So it's irregular. So what we can do is we can do something like this, right? So it's actually form kind of a triangle. So this is a wave 4 triangle, right? And over here, let me just remove some of these unnecessary labeling. Okay, and this ABC no longer valid. Remove it. And over here, this should be it should be this ABC then, right? Now, what happens? All right, before that, let me just change this degree to it should be a 1 degree below minor, so it's a minus one. Okay, so this is our wave four, right? So in order to have this as a wave four, then this have to change, okay? Because we have one, two, three, right? And previously this was like a 4 and 5, okay? So what is going to happen is, let me see. Okay, so this wave 4 is not here, right? Sorry, let me just move this away. Right, it's my mistake. Wave 4 is still here. Now what changes is this this wave, right? So this is actually the wave 4, and then this is the wave 5. Okay, and then this wave 3 itself, right? If you look at this wave 3, previously I do this as a 1 2 3. 4 is just a 1 bar 1 day move, and then 5. So this is the entire wave 3. Now what I'm going to do is I'm going to move this 3 over here. Okay, so I ignore this 1 day. I think I talk about this 1 day and how it is actually imperfection, right? Which is why I leave this labeling. So you can go back to my previous video and take a look at that. So over here, if I have to break down this wave 3, it then becomes a cleaner one. So it's 1 2 3 4 and a 5. Okay, so this one, let me change this to the correct degree and the color. Okay, so then this becomes a wave 3 and then the wave 4, right? So wave 4, you can see that this A wave actually overlaps wave 1, but wave 4, the C wave itself, the N did not overlap. Now, I'm fine with this, right? It's just that it doesn't look perfect, right? It actually looks bad in terms of how this wave, the wave structure itself doesn't look good, right? And using Elliott wave, usually I like to see the beauty in the wave structure. Okay, but now I'm applying a lot of bias over here. Okay, now there's one more thing that you should know about this wave is that there is one very interesting Fibonacci relationship that if I put this wave 1, right, against the entire waves. Okay, I believe this is probably here. Yeah, you can see that. Let me just readjust this again. Our wave structure, this wave 5, end exactly at 4.236, right? Exactly here, right? So this kind of relationship gives me a lot of confidence that Bitcoin has ended. Now, this coupled with the fact that too many of these billionaires, right, and influencers, right, financial analysts who already have a huge stake in Bitcoin are calling you to buy, right? Plus, the fact that I think that the equity markets or the financial markets is it's like a huge pile of fuel, right, that is going to explode, right? Because we have been going up and up and up, right? So price in itself can be a trigger to a crash, right? Especially when there has been no selling out, there's no healthy correction, right? So yeah, and also because if you look at margin debt, right, we are at a historical high for margin debt, not only in terms of the nominal amount, right, but also in terms of the leverage. Okay, so if I have to bring out the margin statistics um, for you, right, um, I'm not sure if you can see this, right? So this is the margin statistics that I'm going to show you, right? As of September, right? This is the last that I took, right? You can see that the leverage ratio is the highest, right, at 5.78, and this is using this free credit balance and this debit balance, right? So this is to read this, right? This is actually the uh, what you call the cash in the securities margin account, and this is the amount of uh of securities that's being held, right? So this amount of securities is supported only by this amount of cash, right? So it's 194. So it's in terms of the ratio itself is really very high. So that is why I think that the entire market is prime for explosive move down, right? So that's it for this analysis. And good luck in your trading, and remember to manage your risk well. Thank you.